Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome you here today. Where's the green shirt? Well, first off, I want to say that green shirt, after we wore it 3 times, did call the bottom in the market, but it had to be worn 3 times. Okay, little joke with you, but you remember when about over a 6-day period, I think the green shirt was worn 3 times. A little fun there. Where's the green shirt today? The green shirt is in a frame. Okay. All right. A little fun there. Now, we welcome everyone here today. We also got Ben Watson in the chat. We welcome him, fellow instructor, and also does teach our in-person events. So you'll see him in the chat. Now, just real quick as we get started, this class is on trading with technical indicators. Our focus here today is, when is resistance not as important? Everyone has like an obsession on resistance, but what are some independent variables, we'll call them, that might be kind of leading the technician to believe or forecast that maybe that resistance might be paper thin, and when the price could probably increasingly, statistically, probability wise, poke through it like we actually saw here today. I want to talk about that because I've seen a lot of over focus on resistance areas. So let's talk about that. Now, just real quick as we get started here today, remember the information is provided for general informational purposes only. Also, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk, not suitable for all investors. Also, when we talk about short options, we're talking about American style options in the style that we look at, okay? And those could be assigned at any time up to expiration, regardless of the in-the-money amount, okay? And also remember that investing involves risk, including loss of principal. Now, want you to note this website right here, schwab.com/events. We do have an Anaheim Advanced Concept Workshop coming up May 30th and 31st. That's in Anaheim at the Marriott there, the Anaheim Marriott. We also have a one-day event in Miami, okay? That's called a Market Drive, and that's June 13th. You do not have to be living in those areas to go to those, okay? And if you want to have more information, just go to that website in blue, schwab.com/events, and the New York Market Drive, a one-day format, and that's going to be right at the New York Marriott Marquis. Now, yours truly, Ben Watson, will be there, among others, and actually will be doing the Advanced Concept Workshop and the Market Drive in Miami and New York. So check this out. Now, if you also go to this website, you'll see other events throughout the calendar year of 2025. So it's a nice way to kind of get a different viewpoint of learning and getting education. It's always nice to actually see it in person. We offer those as well for our clients. Now, just real quick as we get started here today, again, I want to talk about resistance. And I want to kind of talk about what are some of those independent variables that a technician with skill really looks at to maybe not overly focus on resistance, okay? And that's really what we're going to talk about. From that, then what we're going to do is we're going to talk about some new examples, and we got to talk about some past trades. Why? Because the paper money account doesn't have any money left, okay? And I'll show you that here in just a moment. Now, it's not all bad. I'm just saying sometimes it is possible to run out of money. Now, let's go ahead here and just hop right in. So first off, if we were to take a look at this, now I made a comment last Thursday and Friday. It would be pretty hard for some technicians to be short over the weekend when the US and China were meeting in Switzerland, okay? Now, you actually look and see kind of what happened just real quick. Dow's sitting here about 1,000, about 2.5%. S&P sitting here 168, about 3%. Russell, we don't talk about a ton. We talk about the Russell 1000. You're going to see it's up 3.5%. That's the index, folks, the index. And if you look at the NASDAQ, 3.69, 740 points. I mean, who cares, right? Well, so if we take a look at this, the other point that I think is worthwhile to bring out, which I don't think I've heard anyone state, both the US and China, they've had their economies kind of slumping, to say the least. China has stimulated to try to get their economy going. I think when you look at the US and China, both are financially motivated, okay, to try to keep their economy going to get some type of deal done. Is it going to be perfect in the next week? Probably not. Is it going to be perfect in 30 days? Probably not. 90 days? Who knows? But both have debts and they have payments. And when you have debts and payments, usually those parties try to make a decision as soon as possible, well, because they have payments and liabilities. Both of them do. So I think that's an important thing to remember that people don't talk about. We talk about the tariffs, but you got to remember they're both financially motivated. They need a deal on both sides, okay, to keep their economy going. Now, also real quick as we get this going, let's take a quick look at anything else that stood out. Want to bring this back just real quick to the indexes. The big thing that we actually saw, and I posted this on X, the VIX, let's just say it one more time. Hallelujah. Okay. Now, someone said to me on X today that, yeah, the VIX it's still at 18. I wanted to write back and say, you realize it was over 60, right? Okay. Now, we made a comment, just to be true to the comment. It would not be abnormal. We historically would have the VIX go down to about 12-ish, somewhere in that range. In this type of environment where things are not completely 100% ironed out, I think we're on the same page on that. Is anyone thinking that the VIX is going to go down to 12 again in the near term, short term? Probably not, okay? If it did, it's a complete surprise, okay? But the VIX, here we are at 18 and change, almost 19. Hey, what does that really mean, okay? What that actually means is the VIX is declining. That means that many probably indexes, sectors, industry groups, and more stocks than not are probably going to the upside. The big money count doesn't have that short volatility position. It covered that position when it was about 21, 22 on the VIX. So the move here today has no meaning for the big money count outside holding bullish trades long, okay? Now, we also see the Japanese yen down over 2%. And a currency down over 2% or up 2%, this is a massive move. And the yen just really dropping hard. We also see gold actually dropping quite hard, and also the Swiss franc. Now remember, those are some areas that have historically been safety areas, and if those people are not as fearful, those investors are not as fearful, those price levels could drop, and that's what we're seeing. Now, if we pull up, let's say, sectors just real quick, okay? We pull up sectors, and this is going to kind of go into the discussion, and I want to kind of bring this up in just a moment. We're going to look at the sectors, okay? Remember, we actually had the drawing, and you know exactly what that drawing is, and I'm not going to completely draw it out. We had a drawing like this, and we said, really, the expected return, E to the R, and we had volatility. You know exactly what I'm going to draw. And we said if investors were more willing to take risk, what sectors would they typically buy? Can anybody remember that? What sectors would they typically buy? Now, when you look at kind of what's at the top, discretionaries, I'm going to put the Y right here, discretionaries, more volatility, technology, put it right there. Industrials, we labeled industrials kind of more in the middle, and I'm going to include, when I say industrials, I do want to also include the transports, which exploded here today. Like a hot air balloon, not a recommendation, but they went up quite a bit. When you look at energy, we would actually put those in the top because they can be quite volatile. We would also include materials. Now, this is something we've talked about for 15 years. And really, if you take a look at this, the industrials and this M right here, I'm labeling it really for more, let me put the MAT so there's no confusion, okay? And I really should put the IXB, okay, for materials to be fair, to be consistent with the list. And the IXM, that's the financials, okay? So there's no misconfusion. Now, here's the situation. When you get the market to go to the upside, areas like utilities, healthcare, real estate, okay? And I'm also going to include, what am I missing? R, okay, for staples. It's not that they don't go up typically, but people run. They're like, give me something that can go up more. Now, does it mean that those companies are bad? No. But if people have a finite amount of capital, they might say, look, I'm going to have to sell out of some of those utilities, healthcare, staples, real estate stocks, because I want to move to something that has a higher potential upside. It makes sense, especially if someone might be, let's say, cash trapped. And you'll see in just a moment that the IRA is cash trapped, meaning It's fully invested. There's no more money unless you sell a position to go buy something else. Now, what I want to do is let's kind of talk about resistance for just a second, okay? Now, if we look at resistance, there's been over the last couple of weeks, right? There's been so much discussion, and we kind of made a little comment last week that when we actually have, when markets go down, especially down, technicians turn into economists. And I've never met so many technicians that have become some economists as of lately. Are we going to be a technician, or do we want to become a macroeconomist? I mean, we got to make up our mind now. Now, I want to talk about the point. When does resistance not really, there's been an over focus on resistance in our minds, okay? Everyone's saying, well, if we get above the 406 on this level, on the Dow, if we get above this level on the S&P, the 5,500, if we get above this level, and this level, sometimes as technicians, we act like this level can never be broken, and then if it is, the technician doesn't know what to do. And so what I want to do is I want to kind of talk about, when does resistance not really matter as much? Now that might be shocking, because to a technician, resistance and support are sacred areas. Well, let's maybe talk about when they're not. So I want to kind of talk about when resistance is not as important, okay? And there's probably other things to watch than just the resistance area. Now, you guys and gals know, just based on what we just did here right now, if the investor actually saw, okay? So think of this as, the investor's watching resistance and they're just glued to it, okay? But what I want to kind of peel you away from is, if you feel like all you do is watch resistance, I want you to watch the components or the variables that might give us a leading potential idea if that resistance is a Berlin Wall or paper thin, and the price is likely going to breach resistance. Okay, so let's be serious now. Okay, so first off, what would give us an idea that maybe the resistance on the index, the sector, or the stock is probably not as strong as we think it is? Well, number one is the VIX falling? Okay, if the VIX is falling, then it is continuing to drop, then that probably means that on some stocks there's a higher chance that maybe more resistance might be broken than not, okay? Even though historically the area of resistance has held. The key word is historically, okay? Now, the second thing that we would actually say, some of us really like to look at some of these other international components. We know that gold is not just in the US. So some investors like to look for, let's see, we're going to call them fear proxies, okay? Fear proxies. Sorry for the spelling. What are those fear proxies? We're going to use gold. We're going to use yen. We're going to use the Swiss franc. Okay? Now, if you take a look at this, when we saw the market completely fall apart, people ran to gold. They ran to the Japanese yen. They ran to the Swiss franc. But wait, if resistance, and so when I say resistance, we're talking about the price likely to breach above resistance. When? What are some of those independent pieces? Well, the VIX is falling down and it continuing to fall. The fear proxies, gold, yen, Swiss franc, they're still falling. And I'm going to say flat to falling. What time period? What time period? Well, we would actually say probably in the last 2-3 days, okay, minimum, to the last, let's say, 2 to 3 weeks, okay? Now, the other thing that we actually look at the independent pieces is we would also be looking at, let's say, is the NASDAQ leading? Is the NASDAQ leading? Now, when I say the NASDAQ, is it leading, we would also include the semiconductors, okay? Are those areas leading in terms of percentile-wise over the S&P 500 returns, okay? And what duration of time? The last 1 week, the last 1 month, etc. Shorter term, 2 to 3 days to 2 to 3 weeks in that time frame. The other thing, the independent pieces that might kind of give the investor an idea that resistance is not as strong as we actually think it is, okay, is going to be which sectors are leading. Okay. Now, if we're starting to see these areas like tech, as we just talked about, discretionary, if we're seeing energy, okay, materials, okay, if we also see with that, just as we wrote, drew out, but I'm going to write down, I'm going to definitely include financials, okay, and industrials. Now, last week made the comment, why would the financials be shooting to the upside like they have been in the last 2 weeks? There was going to be a recession. That doesn't make any sense, okay? It's completely it's not running parallel to what we've seen historically in prior times where the economy did go into recession. The financials and the industrials were telling us something. But are we truly technicians? Are we just watching the news and being maybe, let's say, led down to a black hole, okay? And not really watching the charts and smearing the thoughts all over the technical analysis. And the biggest thing that I said last week, and I'll say it again, in the last 25 years, I have not seen something where news swayed technicians so badly as we've seen with tariffs. This has been by far the worst, okay? So the one thing is we want to kind of, again, the point of this is when is really resistance? When is it strong? When is it, let's say, less strong? And if we're seeing these pieces like VIX is still falling, the fear proxies, they're still falling or flat. The NASDAQ is leading. The semiconductors are leading. Why would someone buy those growth areas if someone didn't think on industrial scale, okay, that if they are buying those, that's growth areas? Why would you be buying growth areas if you didn't think it was going to get above? And the biggest thing is if we're seeing these sectors actually lead, the historical resistance line is probably not as strong as we thought. Now, the biggest one that I want to write down here is, are we making higher lows going into resistance? And I'm telling you, this is probably the one that people just kind of, they read the charts how they want to see them. In other words, I'm 100% cash, the investor says, and I know I'm seeing higher lows going on into the resistance. Yeah, but we don't know anything. And people will say things like, but we still are at resistance. We're not out of the woods yet. We don't know for sure what's going to happen. Well, nobody ever does. Okay. So investors invest based on what they think is going to happen on probability basis. The farmer does not know when they put the seed in the ground if it's ever going to grow to 6 feet tall. Ever. Cattle farmer has calf. They think it's going to grow to 2,000 pounds, but it could die 3 months in. They don't know. And that's what we got to get out of our minds is we're thinking we know the future. We don't know the future. We got to live on a day-to-day basis, kind of assessing and monitoring what those trends really are. Now, the biggest thing is I won't take the time to do this, but if we flip this and said, hey, James, the support level, what might give us an indication that the support level is not as strong and the price might break down below it? Flip what I talked about. Now, I want to kind of bring up two examples just real quick, okay? So the two examples I'm going to bring up of this last point, higher lows going into resistance. I thought last week we spent quite a bit of time talking about this. I just want to re-stamp it in our minds, okay? So in the last couple of weeks, now it's pretty normal that when you have a trend, ascending triangles tend to happen in an uptrend. Sometimes they can actually happen in a downtrend, but that's pretty unlikely, as we've seen lately. Now, what you're going to notice is we had the Dow make a lower low, check, rally back to the upside, check, pulled back, doink, and then rally back up, okay? Now, what we teach is we teach three types of W's, double bottom, slanted down bottom, and the one of the type of W's that's maybe potentially showing the most momentum, okay, is the tilted up bottom. Many stocks were tilted up bottoms. And if the investor starts to see a tilted up bottom, that just means that the stock is really making some higher lows going into, I've waited to say it for 19 minutes, resistance. Okay, now, if you take a look at this, these dots on the chart, those are higher low markers. Those also signify, scripts not guaranteed for accuracy or timing, verify Have an understanding of what it's actually showing you and confirm it with your own eyes. Now, if we start to see us making higher lows, then what that probably tells us is this resistance is probably not as strong as we thought. Now, going back about 10 days ago, we also talked about wicks or tails. And we said if that investor starts to see a wick that is falling down to the support line and then bouncing back up, maybe like a hammer candle, bullish engulfing, piercing line, hold, close higher gaps, and so on, those might be bounce indications that maybe that resistance is not as strong. Now, why am I going over this for 20 minutes? Well, because there has been such mental twisting on getting people to overly focus on resistance and under focusing on independent variables that are probably more important than watching this all holy resistance line. Okay? Because now if you break out, then you feel like you're underprepared. And it's because the investor has swept underneath the rug these pieces that are important to watch, that are maybe important than the resistance. The other stock that we actually saw that actually had this same type of idea was Amazon. Now, quick heads up as we turn to trading now. Last Thursday, we did a trade on Amazon. And on Amazon, there was the same idea, higher lows underneath with a horizontal line of resistance. Now, someone might say a comment like, well, I'm going to wait for it to break resistance. We do realize there's dollar cost averaging, right? We do realize the investor does not have to put on the whole position at one time, okay? And by the way, do we realize in U.S.-based equities, okay, and I'm talking about equities here, okay, that if we buy like a Amazon or whatever, there's not even commission. Historically, people say, I'm not going to do a dollar cost averaging because I got to pay a commission. Well, on U.S.-based equities, we don't have a commission. And I'm talking about equities, okay? Now, if you take a look at this, we see that same type of idea in a gap to the upside. Now, our target on that trade from last Thursday was 205. I canceled that target so we could bring this up today, but it overshot the target. So if we had a target at 205, which the paper money account did, it opened up here at about 210. And could that have filled higher? It could have, okay? Yes, it could have, okay? But what you're now going to notice is the paper money account still has it, and we're going to look and kind of see, could it maybe even go higher than that? Now, first off, are there any, now the topic again that we discussed so far, I felt has been much needed. Because in the 25 years, I don't think I've ever seen news completely turn investors around to the state of fear, okay? And the language that they've used that, and I'm not even going to go over it. It ain't worth even bringing it up. But what it did is it caused, I think, many investors to really not watch kind of what's happening in trends and just be in a state of fear, okay? You have to understand something. Usually the peak reward to risk ratios are typically when the VIX is at the highest levels, okay? That does not mean the investor has to invest everything in their portfolio, but it's usually the peak state of investing opportunity is in pockets where there's high volatility. And that doesn't mean it has to be derivatives either, okay? And it doesn't mean it has to be an individual stock, okay? So there's a lot there. Now, what I want to do is I want to kind of go down through some examples just real quick, okay? So what I want to do is I want to go back to Amazon for just a moment. Let me tell you what I mean by this, okay? When we look at the IRA account, you're going to notice that we're sitting here at 100 and change, and the cash and the sweet cash is 19,000. If we do, let's say, short put verticals, we have to set aside amount of money for the max loss, etc., to be in the position in or a cash secured put. And what you'll notice is when this has this buying power effect, this is really like the max loss. Okay, if we do like, and you're going to see one in just a sec. When we do a spread, okay, let me show you what exactly I mean by that. It's telling you if we add those all up, we need to have on the side $20,000 to stay in these positions. Problem is, we only have cash of 19,000. So if I go out there and try to do a trade right now, it's not going to let me. So the first thing what I want to do is I want to go down through here and see, are there any positions that might be at, let's say, 80% and above. And I'm looking at a couple of them. Now, if we get out of this position like Netflix, we could release the $1,000. Does that make sense? We don't get that money back that's held until we exit the position or it goes over the expiration. So I can't do any trades until we unleash that. So what I'm going to do is I'm going to pull up Netflix, which has only 4 days remaining. I'm going to right click on it, create closing order, buy it back. Now, a nice tool here is it says dollars to a positive status. That means that I'm in the water here about $1,000. And so to get that, this account has no available buying power. I can't do another position. It's just going to reject me. Now, hopefully this has never happened to you. It's happened to this account, okay? Confirm send, send. Now, just because I put the order in does not mean it's filled. We're going to have to look and see, has it filled and has it released that buying power effect? Now, the other one I'm going to go back to and see, can we actually look and see, okay, now, you're now going to see the dollar to positive status, 23 bucks. I still don't have any buying power. Now, what I'm also going to do is I'm going to go back to what's the next one? This one right here, Tesla. Boy, I want to talk about that. Now, we did a trade. When was this trade put on? It was put on about 6 weeks ago. I'm going to look at it again today, okay? I'm going to right-click on this line, create closing order, buy. That's $2,000 that it's going to release if we can get filled. Now, I'm going to overshoot this by about 2 pennies and see if there's a little bit better chance we can get filled, okay? Now, does everyone understand what we really mean by the buying power effect? So in other words, if I came in and said, hey, which by the way, this is going to be our first trade example. Buckle up for the next 20 minutes because we're going to rip it, okay? Now, here's the deal. When we exit that position, it releases the buying power effect. When I right click, and I'm just going to use this as an example. If we do a short put vertical, and we go to sell and then vertical, okay? If we did a $5 wide vertical, what's the buying power that they really tie up there? Well, the buying power effect is really, it's the spread, okay? 310, 305, less the credit. The buying power in this case, for this example, is 275, okay? So what you're now going to notice is this is per contract, okay? That's per contract in the IRA account. You'll notice if we go to the, let's say the margin account, that might look a little different, okay? And I just want to correct myself. And I didn't pull up an individual position to see this, but when you look at that buying power effect, okay, it's really looking at the max. Well, I don't need to be corrected. I said it's the max loss, okay? And it's how much money is tied up to stay in the position. So if we had a $5 wide spread, less the credit, that's the buying power effect. They're saying, hey, look, preparing, if the investor lost the potential max loss given the vertical, that money is set on the side and it's not able to trade in the IRA account, okay? That money is sitting there, okay, until exited or past expiration. Now, what I'm going to do is let's go back to this chart. Why do we bring this up? Well, if we go back and look at Tesla, now here's the thing. We'll say comments like, yeah, but I heard Tesla's in trouble. Yeah, the stock has been going down. Yeah, this, yeah, that. But the problem is that's not necessarily what it's doing now. See, there's latency in terms of and you'll hear people do this. The market has been going down, and then someone tells you after 30 days, hey, the market's been going down. And you say back, yes, it has been, okay? So there's a time, how fast it actually happened versus when do normal people who are not probably watching the market on a daily or weekly basis, when they hear about it, okay? Now, we could say historically, yeah, Tesla's been going down. That doesn't necessarily mean what it's doing now, okay? Now, if we take a look at this and say what type of pattern do we actually see on the chart, you're now going to notice if I kind of take these lines off and redraw, you got a triple bottom on the bottom, okay? You also had probably most of the touches right about there. And one of the things that we would also kind of write about right on that little sheet is really when the price is up near resistance. How long is it able to stay up near resistance? Okay, now we talked about this last week. This is not a new idea. I'm just writing this down. Now, if you saw that, that could be what technicians call a bull flag. I like to call it a bull flat. The reason why I call it a bull flat is it doesn't really like pull back like a flag. It kind of like goes up and then goes sideways. Okay? Which one is stronger? Well, some technicians think, hey, if you don't pull back at all, bull flat might be stronger. Okay? Now, if you look at this, it ran to the upside and it had a pretty shallow pullback, kind of more like a flag, but it did pull back some off the high. What you're now going to notice is not much of a pullback, and then it pops to the upside. Now, we want to be very careful listening to how some people look at this chart. They'll say things like, yeah, but we got to see if it can get above 358. Then we got to see if it gets above 384. Then we got to see if it gets above 425. Then we got to see if it gets above 465. And as this class, we would say, yeah, no kidding, okay? These prior areas of resistance become new future targets. Is the technician who's really reading the chart, are they saying there's no current trade? Are they saying that these moves from this current level to this level, nah, it's not enough? Kevin and I talked about on Friday, kind of talking about technicians, swing traders. They look for 6, 8, 10% return, maybe in a 2-3 days to 2-3 weeks. You get double-digit percent returns from current prices to the resistance level. This might cause some of those traders to come on down and try to take a shorter term trade. The stock does not have to get through all these levels of resistance, okay, to have no opportunity currently. We realize that, right? But I think what happens a lot of time is these previous levels, they say, well, I'm not going to get in until it gets above this area. Look, you can do whatever you want, but you got to think about what is the investor trying to do. If the investor is saying, James, I want to try to get it and get this move up to this level, well, then investors might try to trade that. That investor might be not saying, I don't know if it's going to get above 358. I'm just trading what the investor might be doing in the shorter term, what might be potentially probable. Okay? Now, I'm going to kind of play the role of the investor. I'm scared. Okay? I'm scared and I don't want to risk that much money. You might know somebody like that. Okay? Now, let's say the investor said, James, now, by the way, I'm going to probably need to sell one more position to do a trade on this. And what I'm going to do is going to go back. Let me just shut these positions. I want to go back and see, is there any other position we could probably get rid of that's pretty high percent so we could do an example trade. The other one's Palantir, and I'm going to take that one down. I'm going to take that one down. It's at 70%. We're going to come back to Palantir in just a moment. Okay? Now, what I'm trying to do is I'm trying to free up some available dollars so we can put a new trade on. Now, what I'm going to do is going to go to Palantir. Okay? Excuse me. I'm going to go right back to the example of Tesla. And then what I'm going to do is I'm going to go down to maybe the strike. Now, here's the thing. If the investor said, James, I'm nervous, okay? If the investor is nervous, this is why there's different strikes. If the investor is more cautious, they might sell a strike that is lower. And that lower strike also has a lower delta associated with it. The lower the delta, the lower the probability the stock could be below that strike price by a penny at expiration. Now, I'm going to play the role of I'm nervous, okay? I'm really nervous. I mean, nervous as a cat. And let's say the investor said, James, normally we talk about delta 30-40. I'm going to go down to something like the 280. Now, this has a delta 22. We're going to right click on the 280. We're going to go sell. And then what I'm going to do, since I'm so nervous, is I'm going to sell the 280 and I'm going to buy the 275. Now, here's the thing. This credit is not as big as normal. It's because I'm trying to trade more probability than higher profitability, okay? Irregardless, I'm trying to put on a bullish strategy that matches the trend and have some capital allocated to the trade. Now, got a $5 wide spread, $1.20 credit. We should know that that max loss is going to be 380. There it is. And the buying power effect represents the max loss, 380. Palantir fills. So what I'm going to do is, again, I know there's been a lot of investors that might have been nervous, but you want to think through that nervousness. You want to think about what strategies, what, if you considered option, what strikes the investor might consider if there is more volatility. Now, what I'm going to do in this case, which by the way is not always bad, I'm going to click, you got a credit of that, 120 less the commission, credit 118.70, send the order. Now, James, it is telling me, hey, I can't do that. I'm going to have to check that. I'm going to go back to the margin account, which I should be able to, okay? And let me just do one in the margin. So I might have not cleaned out as much as I needed to in the IRA yet. So I'm gonna have to put that one in the margin account, but I did, which is fine in terms of position sizing. Now, the other one I kind of want to bring out just real quick is a stock, NVIDIA, okay? NVDA. Now, how many of you today saw the move in the SOX? I'm so glad I'm bringing this up because this is going to exactly hammer what we just talked about. Historically, this has been the Berlin Wall of support, and now we just extrapolate that going forward. This has to be a strong level of resistance. There's no way we can get above this, and it's not out of the woods yet. I mean, we hear people say that stuff, right? And they act like that line is the most important thing and all other things don't even matter. And that couldn't be further from the truth. Now remember what we talked about before, without even looking, right? The VIX is dropping down. That 48.53 might be just hot butter, okay? The price slicing right through it. If we see the yen keep going down, the gold keep going down, the Swiss franc keep going down, we see actually the NASDAQ and the semiconductors leading, and we see those growth areas pushing to the upside and leading those other areas. And if they are, that probably means utilities, healthcare, staples, real estate, they're underperforming probably, okay? And that resistance level is probably not as strong as we think it is. And if that price is actually making higher lows off the bottom, you thought I was going to forget it. Wrong. And we see those little green dots really making higher lows. Yeah, but I didn't want to see that because all I wanted to see was what I wanted to see. Tough. Those higher lows are telling you that even though you might have two bearish friends, me too, the price is making higher lows. If you make higher lows, the greatest likelihood is to make higher highs. And if you make higher lows and higher highs, ladies and gentlemen, boys and girls, that's called an uptrend. Yeah, but it's not long term, but it starts with the short term. And if it happens short term, it goes intermediate potentially. And if it goes intermediate, it might happen long term. But it starts somewhere, right? Now, what I want to do is let's go back to one of the stocks in the semiconductor areas. How many of you are enjoying this as much as I am? Oh, I've been waiting all day. Now, I'm just having a little fun with you. Now, if we take a look at this, okay? Now, one of the things we try to focus on is channels. I can't even look at the chats right now. I can't do it. Some of you are like, James, yeah, I can tell you're really enjoying this. Oh no. And here's the deal. It's the goal of the technician or the investor is to try to put on trades that match the trend. Okay? Whether a technician, a fundamentalist, whatever you want to, what focus you have, or the maybe a collage of focus, that's fine. But the goal of the investors, I think for most investors, I've never ran into an investor that says, my goal is to lose money. Can you help me do that? In 25 years, I've never had anyone tell me that. So I think the goal of most investors is to eventually try to have capital invested to some degree and to maybe make a penny or more, okay? That's why would they invest? Now, what I'm going to do is I'm going to kind of focus on this level. Now, when we see levels, and we mentioned this on Friday, right? When we go from a resistance to a resistance, I'm not even going to kind of look at it. If that resistance is between 6 to 8, 10%, this might get those swing traders out Sorry, I got to draw from line to line. This might get those swing traders out, okay? And they're playing a broken resistance to the next level resistance. Now, if you have a higher high in the shorter term, what's the greatest likelihood? To make a higher low, okay? Now, if we get above that level and we go from 129 to 143, what do we have again? It's another 11%. Now, you got to remember something. A bearish exit could be a bullish entry. What's a bullish entry? A bullish entry could be a bounce off support and or a breakout of resistance. So a breakout of resistance, horizontal or diagonal, could be a bearish investor's exit and a bullish investor's entry. Now, could you get both happening at the same time? Yes, we've hit that before. Now, what I'm going to do in this case is, let's say the investor says, James, I want to buy the shares. Okay, let's go to the paper money account. I'm going to have to go to the margin because we talked about that. Why? I'm going to bring up this position. Let's say the investor says, James, I just want to do the shares. I want to do the shares. Fine, let's practice. We're going to go buy custom, and I'm going to go with OCO bracket. Now, I'm going to kind of do something. Now, don't laugh at me. Don't laugh at me, okay? Let's say the investor said, James, I'm really nervous. Okay, fine. I'm going to go 10 shares. Now, last week we talked about, for example, doing position sizing. And let's say that this example trade was 10 shares. How much are we investing capital-wise? Well, 10 shares on a stock that's $122, it's really $1,200. Fair? $1,200. Now, what I'm going to do is I'm going to put the target right at 129.21. Okay? I got to write this down here just real quick. 129.21. That's going to be the target. That's kind of the middle of the channel. Might you go higher than that? It's up to you if you want to do that in the practice trade. Now, underneath, has there been some higher lows that have been underneath where we could connect these lines? Yes or no? Well, yeah, there's been some higher lows, right? And if you're making higher lows, the greatest likelihood is to really make higher highs. Higher lows plus higher highs could potentially mean uptrend. You make higher lows and higher highs could also mean that the resistance we thought was a Berlin Wall is not as strong as we thought it was, okay? If I took, for example, where I'm pointing to 115.89 less 2%, it's going to get us 113, okay, 57. All right, now let's think about something just real quick, okay? Let's imagine that I'm a really nervous person. And I said, hey, I'm going to buy 10 shares of stock at 122.52, and I'm going to set the stop at 113.57. So what that's really going to come back to is kind of some just basics, okay? So I'm going to bring this up. I'm going to bring up the NVIDIA, right in the pay money account, right-click on the ask, buy custom with the OCO bracket. I'm going to come back to exactly what we had before, but in the pay money account, okay? There it is. I'm going to put the target that we talked about, 129.21, dated GTC, and the stop, which we just mentioned, was 113.57. Now, I want to ask you just a direct question, okay? We know that if the investor takes this position, it's not a guarantee that it's going to sell exactly out at the stop of 113.57. We know that. That's a risk of the stop, okay? So, but let's say it did, okay, hypothetically. It gets in at 122 and change, gets stopped out at 113 and change. Could the investor risk $90? A forecast of $90. Could the investor risk that? Now, you got to remember something. We don't care if the market was the bullest market we've ever seen in the history of mankind or the current market that we've been in. Risk is risk. Is the investor willing to risk the money? Without the risk, what's the reward? Got to risk something. So the biggest actually case is you got to go back to those fundamentals and say, okay, is an investor willing to risk $90 to see if the trend could work? Okay. Now with stop orders, there's no guarantee the execution price will be equal to or near the activation price. Send the order. Now, what I want to do is I want to kind of show some stocks just in the last 90 seconds. What are some other stocks that a technician might be watching? Well, we mentioned Palantir. Palantir is one of those stocks that could be making really a cup and handle going into the area of resistance again. We mentioned on this stock and this stock, if that new asset class that came out about 5 or 6 years ago continues to go up, I can't mention the name, new asset class as of about 6 years ago, per industry professionals, could those two charts be going up? The other, speaking of semiconductor, that broke inside the old channel, Micron. And that was a pretty major gap here today on Micron. The other stock that maybe some technicians might be watching is App. And also, that's another one, kind of a little gap up right near to that prior high. And the last one I'll make mention of is, well, two more, is Meta, big gap to the upside with a lower shadow. And the last one, ARM, okay? These are some stocks that technicians might watch where they might have some upside potential room to potentially run. Now, we'll find out over time. I'm out of my time. So today, what we really want to do is focus on resistance. Talk about maybe when the resistance is not as important. We cover kind of some of those individual components that the investor might look at more than just staring at a line of resistance that has historically held. Now, I also want to give you a quick reminder that coming up next, we got Cameron May that will be doing our next class, and he'll be talking about cover calls and short puts. Want to thank Ben Watson for answering those questions in chat. You can join him on Trading Futures tomorrow morning as well. With what we discussed, it was done for example, illustrative purposes only. And remember that all investing involves risk. Stay tuned for Cameron coming up next. Take care. Bye-bye.